Many people fear a stock market crash and see it as a sign of doom and gloom. But what if you could turn a crisis into an opportunity? What if you could use your cash reserves to buy stocks at bargain prices and reap the rewards when the market recovers? That's exactly what some savvy investors do when they invest during a downturn. In this article, we'll show you how to invest when the market is down, why it can be beneficial for your long-term wealth, and what risks and challenges you need to be aware of. One of the key principles of investing is to buy low and sell high. When the market is down, you have a chance to buy stocks at lower prices than usual. This can increase your potential returns when the market recovers, as history has shown that stock prices tend to rise over time. However, this does not mean that you should buy any stock that looks cheap. You need to do your research and find quality companies that have strong fundamentals, competitive advantages, and growth prospects. You also need to diversify your portfolio across different sectors and industries to reduce your risk of losing money if one area performs poorly. Of course, investing when the market is down is not without risks. You need to be prepared for more volatility and uncertainty in the short term. You also need to have a long-term perspective and be patient for your investments to pay off. You don't want to invest money that you might need in the next few years, as you may be forced to sell at a loss if the market does not recover quickly enough. You also need to have an emergency fund that can cover your essential expenses for at least 6 months in case of a job loss or other unexpected events. Investing when the market is down requires discipline, courage, and prudence. Investing when the market is down requires you to have a clear vision of your financial goals and a realistic expectation of your returns. You should not invest based on emotions, rumors, or hype. You should also not invest more than you can afford to lose or chase after quick profits. You should have a long-term horizon and stick to your plan regardless of market fluctuations. Investing when the market is down can be rewarding if you do it wisely and patiently. Investing when the market is down can be a smart way to build your wealth over time. However, it requires you to have a solid strategy, a diversified portfolio, and a disciplined mindset. If you took $5,000 and invested it in any of these companies during the Great Recession, you would have returned a nice investment. If you invested $5,000 in Starbucks, a coffee chain that rebounded strongly after the recession, at its low of $4.08 on November 21, 2008, you would have bought about 1,225 shares. As of February 22, 2023, SBUX closed at $113, so your investment would be worth about $138,425. If you invested $5,000 in Amazon, an e-commerce giant that thrived during the recession and beyond, at its low of $35.03 on November 21, 2008, you would have bought about 143 shares. As of February 22, 2023, AMZN closed at $3,222.00. So your investment would be worth about $460,746. If you invested $5,000 in Netflix, at its low of $18.96 on November 21, 2008, you would have bought about 264 shares. As of February 22, 2023, NFLX closed at $516.39. So your investment would be worth about $136,329. If you invested $5,000 in Costco, a warehouse club that offers bulk discounts and consumer staples during a recession, at its low of $43.06 on March 6, 2009, you would have bought about 116 shares. As of February 22, 2023, cost closed at $472.50. So your investment would be worth about $54,810 if you invested $5,000 in Apple, a technology company that innovated and grew during the recession and beyond. At its low of $11.17 on January 20, 2009, you would have bought about 448 shares. As of February 22, 2023, AAPL closed at $171.68, so your investment would be worth about $76,913.44 if you invested $5,000 in Tesla, an electric vehicle company that disrupted and dominated the auto industry, at its low of $3.89 on January 15, 2010, you would have bought about 1,285 shares. As of February 22, 2023, TSLA closed at $742, so your investment would be worth about $953,970. These are just some hypothetical examples based on historical data and do not account for taxes or fees. They are not meant to be investment advice or recommendations. You need to avoid panic selling, do your research, understand the risks, and take advantage of opportunities. You also need to have an emergency fund, a long-term perspective, and realistic expectations. By following these principles, you can turn a market downturn into an investment opportunity. Be fearful when others are greedy and be greedy when others are fearful. Warren Buffett. This quote means that you should buy stocks when the market is down and sell them when it is up, taking advantage of the emotions of other investors. According to Wall Street Zen, some of the stocks that have strong buy ratings from Wall Street analysts as of 3/18/23 are New Fortress Energy Inc., a company that provides liquefied natural gas solutions. It has a consensus price target of $53.50, which implies a 95.61% upside from its current price of $27.35. Entegris Inc., a company that provides specialty chemicals and advanced materials for the semiconductor industry. It has a consensus price target of $111.09, which implies a 36.04% upside from its current price of $81.66. ZTO Express Inc., a company that provides express delivery and other value-added logistics services in China. It has a consensus price target of $34.60, which implies a 21.62% upside from its current price of $28.45. According to MarketBeat, some of the stocks that have strong buy ratings from Wall Street analysts as of 3/18/23 are JD Sports Fashion plc, a company that operates as a retailer and distributor of branded sportswear and fashionwear. It has a consensus price target of $1,000, which implies a 1,000% upside from its current price of 10 cents. Progenity Inc., a company that provides molecular testing products and services for women's health and oncology markets. It has a consensus price target of $5, which implies a 1.000% upside from its current price of 5 cents. Acasti Pharma Inc., a company that focuses on the research, development, and commercialization of prescription drugs for cardiovascular diseases. It has a consensus price target of $2.50, which implies a 900% upside from its current price of 25 cents. These are just some examples based on one source and do not account for other factors that may affect stock prices or performance. You should do your own research and due diligence before making any investment decisions. According to Forbes Advisor, some of the things that you can buy when the market is low are index funds, which are diversified portfolios of stocks that track a specific market index, such as the S&P 500. Index funds offer low-cost exposure to a broad range of companies and sectors, and can help you benefit from a market recovery over time. Dividend stocks, which are shares of companies that pay out a portion of their earnings to shareholders on a regular basis. Dividend stocks can provide a steady income stream and cushion your portfolio during market downturns. They also tend to be less volatile than non-dividend paying stocks. Value stocks, which are shares of companies that trade at a lower price relative to their earnings, sales, or book value. Value stocks may be undervalued by the market for various reasons, such as poor performance, negative sentiment, or industry challenges. However, they may also offer attractive growth potential and higher returns if they regain favor with investors. Investing when the market is down can be a wise financial move if done correctly. It requires a solid strategy, a diversified portfolio, and a disciplined mindset. Investing in quality companies with strong fundamentals, competitive advantages, and growth prospects can help you maximize your returns when the market recovers. However, investing in a downturn also comes with risks and challenges, so it's crucial to do your research, understand the risks, and have a long-term perspective. By following these principles, you can turn a market downturn into an investment opportunity and build your wealth over time.